Well, folks, just like that, we have another big week upon us in the stock market, and well, we have to break it down in this video. You guys know the drill. We're going to break down a bunch of stocks. We're going to break down charts, companies, numbers, earnings, all that good stuff, and we're also going to break down some key economic events that I'm looking out for this week. But before we actually dive into that, let me talk to you guys about the sponsor of today's video, Moomoo, and their absolutely crazy new promotion they're running right now. If you guys open up your account using that link down below or by going to stocksurfest.com/Moomoo and you deposit at least $100, get this, guys, you get 5 stocks, each up to $2,000, and you get a free share of C3AI, which is exclusive to this channel. That's with just a $100 deposit, and if you deposit at least $1,000, get ready for this, guys, you get 10 more stocks, totaling 16 stocks, and with a $5,000 deposit, this is where it gets nutty, guys. You get a free share of either Tesla or Google stock guaranteed, on top of all the other, rewards or free money, free stocks, whatever you want to call it, that you already got up until that point. So pretty crazy. Best promo right now by far. Use that link down below, and of course that helps out the channel. I appreciate you guys as always. And now, cheers, let's dive into the video. So at this point, you guys know the overall stock market, which honestly we're not going to dive too deep into in this video, but just to take a quick glance at it, you guys know we've been doing very well, right? S&P 500, NASDAQ, the Dow, the Russell, these have been crushing it. I mean, you guys can see here, SPY hit a high of $492, or not 92, geez, that'd be an all-time high. $432, I think that was on Friday. I mean, you guys can see on the 4-hour chart here, and that's a high on the 4-hour chart, obviously, and I believe maybe, actually, no, not on the yearly chart. No, it actually is. So we just hit a high on the 4-hour chart and on the yearly chart on SPY. So it's obvious who's in charge right now in the short term. It's the bulls, guys, obviously, right? And Triple Q, which is the NASDAQ 100, also just hit a high on Friday. And obviously the bulls are in charge here on the 4-hour chart, on the yearly chart, you name it. This has been doing very well, as big tech has been doing extraordinarily well over the past couple of weeks. And year to date, guys, you know this, big tech is crushing it. So obviously the markets are doing very well, and that could change this week, maybe, depending on a lot going on. We have a lot going on, guys. We have CPI, we have FOMC on Wednesday, we have unemployment claims, which we get every week, that's on Thursday, and we have retail sales data. So let me actually come over here to the Safari tab. Bear with me, guys. Let me make my big old head a little bit smaller. There we go, guys. Let me plot myself right here at the bottom right. So check it out. Let me zoom in a little bit on this as well so you guys can see kind of what I'm looking at. So this is Forex Factory, just a website that you can go and you see all the upcoming economic events, not just for the US. You can see them for, Europe, Japan, a bunch of different countries, right? Currencies here, you guys see that. So go check it out. Not a sponsor. I mean, I've been using this website for quite some time. But look, on Tuesday, if we come down a little bit here, we see USD. You guys see that? That is, and mind you, we have 3 red folders next to the 3 USDs. That means it's a high impact event. That means it's something worth watching, worth paying attention to, right? Let's put it that way. And that is the CPI month over month number, the year over year, and the core CPI, which you guys can see if I expand this a little bit, we can see the month over month is forecasted to be what? 0.2%, and previously it was 0.4%, so that's good. It's coming down for the month of May. That's a very good sign there. And if we come down a little bit here even more, CPI year over year is going to come down to 4.1, guys. That's pretty crazy, and previously it was 4.9. You can see that right here if I zoom in maybe a little bit more. Either way, you guys might already know these numbers, but yeah, 4.9 it was previously. Now it's projected to be 4.1. That's fantastic. And when it comes to core CPI, excluding food and energy, is what that number is, guys. That's on a monthly basis going to come in at 0.4% projected. Of course, we don't know exactly what it's going to come in at until it actually does come in, right? And last time it was 0.4%. And yeah, pretty much right in line with what it was last month there for core, but not non-core CPI is coming down 4.1% on the yearly basis. Last time it was 4.9. That is a very good sign. So that's what we get on Tuesday, guys. Very big day on Tuesday for CPI. And of course, this is important because the Federal Reserve, Jerome Powell, everybody over there on the FOMC, they use this data to then make decisions, and you guys know how that goes, right? This is very important stuff, and they want inflation to continue to go down. Everybody does that, does want that, and the fact that we are seeing that, that is a pretty good sign as of right now. Of course, the future is uncertain. We don't know what's going to happen in 6 months to a year from now, but right now we're seeing this inflation come down, which is fantastic. So we also have the big old FOMC statement, the press conference, all that good stuff. That's, I believe, on Wednesday, June 14th. Yup, that's at 2 p.m. on the East Coast. You guys can see these high-impact events right here. So we have the FOMC economic projections, FOMC statement. We'll get rate hike, cut, this, that, steady. We're not going to get a cut, guys, or a hike. We're most likely going to be flat, which you guys can see the Fed funds rate right now. Previously, it was at 5.25, and now the forecast is 5.25, meaning we're going to be flat pretty much, right? No hikes. But of course, no cuts either. We're not going to get a cut anytime soon, as you guys know, if you've heard what Jerome Powell's been saying over the past couple of meetings. So, yeah, Wednesday is going to be big, guys. We're going to get a bunch of questions. We're going to get Jerome Powell, answering those questions, probably dodging a bunch of them as well, as you guys know. But we're going to get a better insight on the economy, where his head's at, inflation, interest rates, all these very important things. And this is, of course, going to move the stock market. And really, it's going to be, the market moves around the language of Jerome Powell, how he states things. Is he more dovish, hawkish, right? Is he more, is he pointing towards more hikes in the future, or is he pointing towards maybe a cut now? That's the big thing that people are going to be watching out for. What's the updated thought on, when are we going to get a cut? That's going to be a huge thing to keep your eyes out for tomorrow, no doubt. Then on Thursday, like we always do, we have the unemployment claims. That was previously at 261,000. You guys can see right here. Now it's going to come in at 248,000 projected for the week. All right, and coming down a little bit more. Is that it? Actually, that might be it. No, we actually also have retail sales, which last time it was 0.4 in the green. Now it's looking to actually decline by 0.1%. And if you guys didn't know, retail sales, this measures the change in the total value of sales at the retail level, and this is released monthly about 16 days after the month ends, and it's the primary gauge of consumer spending, which accounts for the majority of the overall economic activity. So yeah, guys, needless to say, this upcoming week is going to be a big one for maybe not so much for earnings. Yes, we do have a couple companies that we're going to talk about today, but mostly for the economic events that we talked about, CPI, the FOMC statement, the press conference, all that stuff. So let me come over here to the charts very quickly. Bear with me. And by the way, guys, hit that like button if you're finding value in the video and you're enjoying the video. I appreciate you guys. As always, drop a comment, hit that subscribe button while you're at it. And now let's take a quick look at a couple of these companies that are set to report earnings. The first one is Adobe, guys. ADBE is the ticker, and this one's been doing very well. You guys know on Friday it went up 3.4%, and quite frankly, now that I'm looking at the chart, it's just way overbought in the very short term, and maybe with earnings coming up now, it's pricing in kind of perfection, or it's pricing in perfection, if you will, for the numbers coming up. So that worries me a little bit. If the numbers are not as good, this could be setting up for a big drop, if you guys kind of catch my drift here. So we have earnings on, let me see, Wednesday. Let's see here. Wednesday on the 15th after the bell. That is what? Wednesday, I believe. Yeah, or Thursday. Either way. They're this week, middle of the week, and they're projected to do EPS of $3.52 per share, and last year they did $3.35, so that's a good increase there from last year, and revenue is going to come in at projected $4.43 billion, which would be up around 1.1% year over year. In other words, it's going to be flat. Last year they did $4.39 billion of revenue, so it's all going to come down down to the guidance, guys. What's the next quarter going to look like? What's the full year going to look like? And I'm telling you guys, if that comes in short or it's a disappointment, I mean, this stock's already rallied in the past month about 40%. I'm telling you guys, that could be setting up for a little bit of a sell-off. Not a complete collapse like the Great Depression or anything crazy like that, but probably down, in my opinion, maybe like 20, 30 bucks. I don't know, maybe a little bit here towards those highs from February, heading into March, April. So keep your eyes on Adobe here between 380, 400. That's where I'd be looking at it as a trade. So yeah, I mean, they're on Thursday, Wednesday, whatever day the 15th is. Let me actually pull it up for the sake of this video on my calendar. I can't count days, guys. Yeah, Thursday's on the 15th. So they're reporting on Thursday after the bell. Keep your eyes out on them. We also have Kroger this week, guys, which admittedly I've never been to a Kroger, but they report on Thursday in the morning, and this chart looks a little bit wonky, right? Over the past couple of days, we've seen a lot of selling, and actually, no, not really in the past couple of days, but in the end of May, heading into the early days of June, this stock got destroyed. I'm not sure why, actually. It went down around $6, about 11, 12%. It's not like we had earnings or anything, or maybe we had a big piece of news that I'm missing. But overall, that stock got destroyed. I'm not seeing exactly why. Maybe it got swept up in the overall market sell, or maybe we saw a market pullback, or I don't know. Maybe people are just dumping out of that stock. We'll see. But overall, at this point, we are technically holding that trend I just drew out, and we're also holding, or not holding, but getting rejected at around 50 bucks, which has been resistance since the end of last year. So at this point, guys, we are consolidating a little bit in the mid 40s. You guys see that? Are we going to make a pop maybe above the moving averages towards that $50 high, 48? Maybe, maybe not. I don't know. But again, with earnings coming up and them looking to do, let me see here, EPS of $1.44, which last year they did $1.45, so that's pretty flat. What are they going to do? I don't know. Revenue, let's see, $45.2 billion, up 1.3% year over year. Last year they did 44.6, so that's pretty flat. So I mean, it's not like they're going to be doing great year over year, but you guys got to realize this company did very well in 2020, heading into 2021, and they're cooling off. A lot of these companies are, because they grew so fast in the past 2-3 years. And now they're kind of cooling off probably for a couple years. I don't know how long, but, that's kind of how it goes. We can't just see growth every year into infinity and beyond. That's not how it works. But look, at this point, let's see what happens in the mid-40s. I'll set my alert at 47 here. Let me do that. Mark is at or above. And we'll see where it goes from that point, guys. That's Kroger, ticker symbol KR. Oracle's another one, guys, ticker symbol ORCL. These are the three biggest companies, at least that I'm looking at for this upcoming week, guys. Not the craziest group of companies. Honestly, a lot of the big names already reported. Now earnings season is kind of winding down a little bit. But Oracle is this week, and my goodness, has this stock been doing very well. I mean, all these, a lot of these stocks have been crushing it. You guys know that. I mean, this stock started off the year at around, where was it? I mean, look at this, $75, 80 bucks. Now it's at 110. And this is another one kind of like Adobe that's ran up way too much into earnings. So it's kind of like, it's like, what the heck's going to happen, right? It's very dangerous in my opinion. That's why I don't trade around earnings ever at this point. But we have earnings for this company on, let me see, probably Wednesday. Let me see if I could find it, or see it on the 4-hour chart. Let me pull this up. No, not on Wednesday. They're on the 12th. So that's tomorrow, guys. Monday after the bell, we have Oracle reporting. So get ready, guys. That's the first company out of the three that's reporting. So they're looking to do earnings per share of $1.58. Last year they did $1.54, and revenue, unlike Kroger and Adobe, is going to be growing a good amount. $13.73 billion is the estimate, up 16% year over year. Not bad for Oracle, but is that already baked into the stock price? Probably. I mean, I'm gonna say yes. So it's kind of dangerous to mess with this unless they have a blowout earnings. I feel like it's going to pull back. I mean, we'll see. I could be wrong. What do you guys think? Let me know in the comments, but it's a little bit overbought. Same with Adobe, so I'm going to be patient and see how they end up playing out. And those are the three main companies I'm looking at for earnings this week, guys. And let's just run through some other stocks quickly here before we wrap up the video. Tesla's one that I think is a little bit overbought as well. There's a trend here, guys. You're noticing a trend. A lot of these stocks are just overbought, but it doesn't look like they want to pull back, right? It doesn't seem like they're starting to pull back or anything like that. Tesla went up 4% on Friday, but at some point, I think a healthy pullback is going to come. And we'll probably see a pullback, in my eyes, anywhere from 205 to 215 on the low end, maybe 220, 225. That'd be a healthy spot for this to come down to. And that's what I'm looking at for this week for Tesla. Will it come down a little bit, or will it just keep on ripping through these levels? I don't know. I mean, look, last week we took out the highs from October into November. You guys can see these highs were right around 230, 235. We rip right through those, and we also ripped through the highs from February, right, heading into March, April, being 215. So that had a huge move, and it just needs to cool off in my eyes. But when will it? I don't know. That's the $1,000,000 question. So Microsoft's another one that did actually cool off a little bit. Last week, you guys can see here, we went from 338.50 down to about 320, so that was a decent little drop there, 5.5%. That's something, right? I mean, it's not 15, 20%, but it is decent there. And it looks like we did get some buying on Thursday and Friday. If you guys take a look here, if I pull the 5-day chart up, you can see we took the highs out from Thursday. So it looks like buyers are starting to come in. And for me, guys, I'm looking at Microsoft like, okay, maybe we can trade it between let me see here, 330, maybe up to about 338, 340. You guys can see those were the highs from earlier this month, end of May as well. So this could be a continuation play. That's kind of what I'm looking at on Microsoft. So I'm going to set my alert at, let me put it at 328, and we'll see where it goes from that point. Let me do that now, 328. Let's go. All right, guys, two more stocks. The first one is CrowdStrike. Well, the first of the last two is CrowdStrike, which I think is also starting to come down. Well, it has been coming down over the past couple of days, really 1, 2, 3, 4, 5, 6, 7, 8, geez, 8 trading days. So this is down around, let me see. And the funny thing is, it's not down much. It's only down about 8% over the past 8 trading days. But at some point, I think if it could come down a little bit more, maybe to 138, forget 138, maybe 140, 145, just a couple more dollars, right? Like you guys can see, it came down to after earnings. If it could come back down to that point, 140, that's where I think would be a good opportunity, at least in my opinion. Of course, I'm not telling you guys what to do, but that'd be a healthy spot around this moving average. And you guys can see back in the middle of March, heading into April, you guys can see we struggled at about 138, 140. We then broke out. Now we're coming back down to test it. We already saw a huge V-shaped recovery off 140. That was a couple days ago. We went from 140 to 160. I think if we test 140 again, we could get some sort of bounce, short-term bounce, and that's where I'm looking to play CrowdStrike. So that's CRWD. And the last one, guys, is Smith & Wesson, SWBI, which right now we have an ascending triangle, and this is on the verge of breaking out, in my opinion. And they report earnings not this week, but I believe next week. They're on the 22nd of June. So what is that? A week from Thursday. So yeah, they're next Thursday, not this Thursday, next Thursday. And we have clear resistance at around 1250 on SWBI. That's been the resistance since the end of November, early December. And clearly, we've been struggling there the past couple of weeks. And, it's on the verge of breaking out, in my opinion. And if we do take out $13, we see that ascending triangle start to play out. we can get a lot more upside in my opinion. So I'm going to set my alert at $13, and let me see on the 3-year chart or the 1-year chart what we're looking like. I mean, guys, if we take 13 bucks out, which mind you, 13 was support back in about a year ago, back in June of last year, heading into July, looks like August a little bit. So if we break out of there, this could start going 14. I mean, you guys can see 14.25 is a big level, 14.60, 15.70. Let's just say there could be some more upside from where we are right now. So I'm liking SWBI as a trade, and all of these guys are as trades. So keep that in mind. These are not for long-term investments at these levels. I'm looking at these as trades. So what do you guys think? Let me know your thoughts in the comments. And before you click off the video, do not forget to get your free money from Moomoo. Right now, guys, no joke, they're running the best promo they've ever ran. I'm not even kidding. I don't even know how they're doing it. But look, if you use that link down below, or you go to StocksRefest.com/Moomoo and you open up your account and deposit at least $100, you get 5 stocks, each up to $2,000, and you get a free share of C3AI, which is actually exclusive to this channel. And that stock is worth, I think, $35 right now. So just with $100, you get all those stocks, and with $1,000 deposited, you get 10 more stocks, totaling 16 stocks. And get this, guys, if you deposit $5,000, which I know is a lot, but listen, if you do that, you get a free share of either Apple or Google, guaranteed, guys. I'm telling you, this is the best promo. So if you want some free money and you want to help out the channel, use that link down below. I appreciate you all as always. And with that being said, guys, cheers. I'll catch you in the next video. Good luck this week.